All right. Ever stood in line for a burger so good you didn't even mind the wait?
Oh, yeah.
That's the Shake Shack effect. And today we're diving deep into SHAK, the company behind those irresistible burgers, fries, and shakes.
I gotta say, they do have some pretty good fries.
We'll be looking at their business, their financials, even what the market thinks of them as an investment opportunity.
It's a fascinating case study, really. They've managed to hit that sweet spot between fast casual and premium ingredients, and that resonates with a lot of consumers.
Definitely. And before we get too deep into those juicy details, make sure you're subscribed so you don't miss out on any future deep dives.
You don't want to miss those.
Okay, let's unpack Shake Shack's journey. From a single hot dog cart in New York City to over 500 locations globally, it's been quite a ride.
Their growth has been impressive, no doubt, and they're aiming even higher with plans for at least 1,500 locations in the U.S. alone.
Wow, talk about ambitious.
Hmm.
What's fueling this expansion? Is it just the burgers or is there more to the story?
Well, their core business is built on that classic fast casual model, but with a focus on quality ingredients.
Right.
Think fresh Angus beef, cage-free chicken, and those delicious crinkle-cut fries.
Ooh, those fries.
They're also big on sustainability, which is a big draw for a lot of consumers these days.
So they're not just appealing to our taste buds, but also to our conscience.
Mm-hmm.
That's smart. But when we look at their revenue streams, something interesting pops up. Over 96% of their revenue comes directly from those Shack sales.
That's right. Licensing and franchise fees do play a role, but it's clear that those burgers, fries, and shakes are the real bread and butter of their business. And those Shack sales are bringing in some serious cash. A mature Shake Shack store rakes in an average of $4.3 million a year with operating margins over 20%.
Okay, that's impressive. But high revenue doesn't always translate to success, right?
Yeah.
We need to look at the bigger picture. What about the leadership behind those million-dollar burgers? Tell me about the CEO, Rob Lynch.
Rob Lynch has been at the helm since 2019, and he's navigated some pretty choppy waters, especially during the pandemic. He led the company through a quick pivot to a to-go-only model and ramped up their digital presence, which was key to surviving those uncertain times.
So he's a leader who can think on his feet and adapt to changing circumstances. That's a good sign. But what about transparency? How open is Shake Shack with its investors?
I'd say they're pretty transparent. They regularly communicate through reports, press releases, and even have a Stand for Something Good report outlining their social responsibility initiatives.
Interesting.
They're not just talking the talk, they're walking the walk when it comes to things like ethical sourcing and environmental responsibility.
That's good to hear. It seems like they're not just focused on profits, but also on doing business the right way.
Yeah.
Now let's get into the nitty-gritty. What about their investment strategy? Are they playing it safe or going for aggressive growth?
They're definitely playing offense. They're aggressively expanding with new stores, constantly innovating with their menu and pushing hard on their digital platforms. All signs point to a company that's hungry for growth.
That hunger is reflected in their revenue growth, too. Over $1.2 billion in the last 12 months. That's a jump of over 16% year over year. But what about their profitability? Are they actually making money from all this growth?
That's where things get interesting. While their revenue growth has been impressive, their profitability has been a bit more of a roller coaster.
Oh,
Their net profit margin and free cash flow have fluctuated, which raises some questions for potential investors.
so it's not all sunshine and burgers then. What's behind those fluctuations? Are they just growing pains or is there something more to worry about?
Well, that's what we need to unpack. One number that jumps out is their price-to-earnings ratio. It's currently sitting at a whopping 697.41.
Whoa, that's a high PE ratio. What does that tell us about how the market is valuing Shake Shack? Is this a sign of over-optimism or is there something we're missing?
It's a sign that the market has high expectations for Shake Shack's future earnings growth. But it also raises the question of whether those expectations are realistic. To answer that, we need to dig deeper into market sentiment ownership structure and their overall decision framework.
It seems like we've got our work cut out for us. But before we dive into those juicy details, let's take a quick detour to our YouTube channel, Stock Analytics, where we break down complex financial concepts in a way that's easy to understand and, dare I say, even a little fun.
Yeah, we try to keep it light over there. We've got tons of videos breaking down all sorts of companies and investing concepts.
And while you're over on Stock Analytics, don't forget to leave us a comment letting us know which stock you'd like us to dissect next.
Yeah, we'd love to hear from you.
We're always looking for new deep dive challenges. But for now, let's get back to our exploration of Shake Shack and dive into what the market is saying about them.
Right back to the burgers.
All right, so we've seen Shake Shack's impressive growth and their ambitious plans. But what's the overall sentiment from investors? Are they bullish on SHAK, or are there some warning flags waving? Well, the stock performance itself has been quite strong, almost a 95% return in the last year alone.
Wow.
It seems like investors are buying into the growth story.
So a lot of people are betting on Shake Shack to continue its upward trajectory. But is everyone on board with this optimism?
Not exactly. While some analysts are excited about their growth potential, others are more cautious. That sky-high PE ratio we talked about earlier has some folks raising eyebrows, and the fluctuating profitability is another point of concern.
So a mixed bag of opinions then. What are the recent news and events that are shaping these perspectives?
Well, Shake Shack recently announced some strong preliminary fourth-quarter results, which is obviously a positive sign.
Oh?
They've also been vocal about their aggressive expansion plans, aiming to open even more stores, both domestically and internationally. Sounds promising. But expansion can be risky, especially in the competitive fast casual landscape. How are investors reacting to these ambitious plans?
That's the million-dollar question. It's a bit of a wait-and-see approach at the moment. Investors are eager to see if Shake Shack can actually deliver on those promises, especially when it comes to consistent profitability.
Okay, so the market sentiment is a bit of a mixed bag. Now let's shift gears and take a peek behind the curtain at who actually owns a piece of Shake Shack. What does their ownership structure tell us?
When we look at who holds SHX stock, we see a significant presence of institutional investors. They own almost 45% of the company.
So the big players have a big stake in Shake Shack. That seems like a vote of confidence. What about individual insiders? Are they buying or selling?
That's where things get a little more interesting. We're seeing a mix of buying and selling activity from insiders. Some are increasing their holdings while others are trimming theirs.
That does add another layer of complexity.
Yeah.
What can we make of this insider activity? Is it a cause for concern or just normal market fluctuations?
It's tough to say for sure. It could simply reflect individual portfolio strategies or personal financial decisions. But it's definitely something to keep an eye on. Overall, Shake Shack's ownership seems fairly dispersed, with no single entity holding a controlling stake.
So no one person is calling all the shots. That could be a good thing in terms of diversity of perspectives, but it also might mean slower decision-making. All right, we've covered a lot of ground here. We've looked at Shake Shack's business model, their financials, the market sentiment, and even their ownership structure. But what does it all mean for someone considering Shake as an investment?
That's where we need to step back and assess the big picture. We've gathered all these pieces of information, but now it's time to put them together and see what kind of picture they paint. And one of the best tools for doing that is a SWOT analysis.
The classic SWOT analysis: strengths, weaknesses, opportunities, and threats. Let's break it down. Starting with strengths, what are Shake Shack's biggest assets?
Well, their brand recognition is undeniable. They've cultivated a strong image and a loyal customer base. People love that Shack experience. Their commitment to quality ingredients and sustainability is another major strength.
Yeah, those crinkle-cut fries are definitely addictive.
Yeah.
But even the best burgers have their flaws. What are some of the weaknesses we need to consider?
One of the biggest concerns is their inconsistent earnings. We've seen those fluctuations in profitability, and that's a red flag for some investors. They also have relatively high operating expenses, which makes sense given their focus on premium ingredients and a high level of service.
So those delicious ingredients and that friendly service come at a cost. And what about their reliance on urban markets? Is that a potential weakness?
It definitely presents a potential vulnerability. If those urban markets experience an economic downturn, Shake Shack could feel the pinch more than some of their competitors. They're working on expanding into suburban areas, but they're still heavily reliant on those city centers.
All right, so we've got the strengths and weaknesses. What about the opportunities? Where can Shake Shack go from here?
The global expansion potential is huge. They're just starting to scratch the surface in international markets, and they're constantly innovating with their menu, coming up with new and exciting items to keep customers coming back for more.
I'm always a sucker for those limited time shakes. And what about their digital strategy? Is that an area of opportunity?
Absolutely. Their digital platforms are becoming increasingly important, allowing them to connect directly with customers, personalize their offerings, and streamline the ordering process.
So plenty of opportunities for growth and innovation. But we can't forget about the threats. What are some of the challenges Shake Shack might face moving forward?
Well, the competition in the fast casual space is fierce. You've got Five Guys, In-N-Out Burger, Chipotle. They're all vying for a bigger slice of the market. And let's not forget about the economic uncertainty that looms over every business.
Right. A recession could definitely put a dent in those burger sales.
You know.
What about rising costs? That seems to be a concern for a lot of businesses these days.
Yeah. That's a big one. The cost of ingredients, labor, and everything in between is going up. Shake Shack will need to find ways to manage those costs effectively without sacrificing quality or raising prices too much.
So a lot of factors to consider. It seems like Shake Shack is at a bit of a crossroads. They've got a lot of potential, but also some significant challenges to navigate.
Exactly. And that brings us to the ultimate question. Is Shake Shack a buy, a hold, or a hard pass?
That's the question on everyone's mind. But as you said throughout this deep dive, there's no easy answer. It all comes down to individual risk tolerance, investment goals, and careful consideration of all the factors we've discussed.
You got it.
It's a tough call for sure.
It is. It really is.
So we've explored Shake Shack from top to bottom, their business model,
Yeah.
their strengths and weaknesses, their opportunities and threats, and even what the market thinks of them. It's been an insightful journey exploring the world of Shake Shack.
I've enjoyed it.
We've peeled back the layers of this popular burger chain and uncovered a lot of interesting information.
We sure have.
And don't forget, if you're hungry for more financial insights, head over to our YouTube channel, Stock Analytics, where we break down complex topics in a way that's easy to understand.
We've got a great community over there.
We're always looking for new deep dive challenges too. So let us know in the comments which stock you'd like us to dissect next.
We love hearing your suggestions.
And as always, remember, the information we've discussed is purely for informational purposes and not financial advice. Do your own research and consult with a financial advisor before making any investment decisions.